I mean, it is an unsettling time. You know, if you cover trade and trade economists, they're used to kind of things being much more boring than this, frankly. So whether they welcome that or not, I don't know. But it's worth just kind of taking a step back and looking at what is being talked about right now and just putting a bit of sense behind it, because there's been so much talked about, including on social media. This is on Truth Social, Donald Trump's own platform. He recently posted this, which is kind of talking about this chart, which I'll talk to you about in a sec. He said tariffs and tariffs alone created the vast wealth for our country. Then we switched over to income tax. We were never so wealthy as during this period. Tariffs will pay off our debt and make America wealthy again. And he was talking about this chart, and let me just kind of make that slightly bigger for you so you can see what he's talking about here. This is showing you the share of total federal revenue, so the money coming in to the coffers in Washington, that comes from tariffs. And it goes all the way back to the late 18th century, 1798 there. And what you can probably make out is, for much of American history, certainly the first century or so of American history, the majority of federal revenues did come from tariffs. And then look at that line. So that's 100% up there. Look at it now. It's come down in recent years to under 2%. So the line is basically close to zero. And the point, obviously, that Donald Trump's making there is, look, we made loads of money from tariffs before. Why can't we do that again? Worth saying, though, OK, so this is looking at how much tariffs are bringing in as a share of total revenues. A slightly better way of looking at things, this is the way we tend to do things within economics, is looking at how much that money is as a share of your total national income. It's the typical way it's done. And if you do that, it looks slightly different. So this is tariffs and how much money they're bringing in, still not inconsequential, as a share of GDP. And you can see it's a lot lower, OK? And the issue here, OK, is that tariffs brought in quite a lot of money as a share of how much of tax the government was raising. But the government was really small back then, and things have changed since then. Things have changed because there is a bigger welfare state in the US. There is a lot more government spending, for instance, on the military. And when you look at the total spending that the government has to actually accommodate, well, it's a lot higher. That obviously is the Second World War. But you can see it's gone up and up and up. And there is a massive gap between what tariffs bring in, so, you know, money charged on imports coming from overseas, and that line. And you need to find a way of bridging that line. And the way that that line has been bridged in the last century or so is mostly through income tax and payroll taxes. So that's the red bit there. The dark red is income tax, then you've got payroll taxes. And that brings you more or less up to there, and then you've got a few other taxes. It's just the way the American economy has been run, and it's been run that way for basically a century. And the question is, how much higher can you get that dark bit? That depends on how high those tariffs are going to be. It's worth saying this is not the only kind of reason people are talking about tariffs at the moment. It's also used as leverage in negotiations. But again, if we look back at just the rate of tariffs, so just the percentage on average that people, if you're sending goods to the US, you're having to pay, it did used to be a lot higher. So look back here. This is the tariff of abominations, as it's known, kind of during the Civil War back in America. It was up above 60%, and then it kind of went up to 60% again around the time of the 1930s, the Smoot-Hawley Act. It's certainly the case. Look at this line and how low it goes. It's certainly the case that it's come down an awful lot. It came down after the 1947 GATT. It was a big treaty that basically said everyone needs to bring their tariff rates down. And that's the era of free trade. All that period there, until you can maybe just about make out that line going up a wee bit in the last few years. So that's Trump 1.0, you might call it. And his plan is to try and get that line higher. Whether you can actually get it high enough to raise serious money, that's a big question. You saw that glass chart a second ago. There are big question marks about that. But certainly he's talking about higher tariffs on various different countries. And the countries in question seem to depend on the press conference and what the questions are. But, for instance, we've heard about China, and this is just showing you the biggest trade partners in the US. So China is the biggest, Mexico, Canada next, and just what they're paying in terms of their average tariff right now. These are averages. There's loads of different tariff lines. But nonetheless, China's about just over 3.6%. Mexico and Canada, because they're part of this free trade arrangement, down close to zero. And then Japan, Germany, and the rest kind of are all around that 3.6% level, including the UK. We're just 11th in terms of the number of trade partners or people importing stuff into the US. If Donald Trump was to get his way and to increase these up to around 10%, or indeed beyond that, as I say, we just don't know. There wasn't a day one executive order on tariffs, so we just don't know. Then that, as you can see, would completely change the big picture as we know it. And this is a new world, you know, it's a new world for both the global economy and for the US. But for the time being, we're still mostly guessing at what these numbers are going to be until we get some actual detail.
Yeah, indeed. Fascinating stuff, Ed. And we'll have to see how things are going to play out, because we all know with Donald Trump, don't we, that sometimes his bark is worse than his bite. But for the time being, Ed, thank you very much indeed. Thank you.